last thing you want when you're starting to invest is to lose money, of course. So if you can't afford to make mistakes, here is the best list of all the strategies in the stock market that you should and should not use. Also, thank you guys so much for the 2,000 subscribers. 2022 is gonna be a crazy year. Let's start with probably the most common investing strategies out here, that is value investing. If you're just a little bit familiar with the stock market, you might know who Warren Buffett is. He's viewed as the legend of value investing. The strategy in itself isn't really hard. It just consists of finding companies that are trading at a lower valuation than they should be, maybe because they just didn't meet expectations on the newest earnings reports, or if a negative catalyst just hit the market, like, I don't know, probably like, I don't know, Chinese virus, if that would ever happen. But what is really interesting about this strategy is that it requires a few mindset tricks so that it works out well for you. And one that is particularly difficult for new investors would be to buy a company as the share price is going down. Because of course, if you want a good deal on the company, you're gonna have to buy when the stock price is going down. And unfortunately for you, it's gonna be almost impossible to have a perfect timing when you buy at just the lowest price and then it just rebounds. But don't worry too much about this. I'm actually gonna speak about a way for you to completely avoid this later on this video, so just stay tuned. It's gonna make value investing even better than it already is. And another really hard mental requirement for value investing is to have a long-term view on your investment. And that is true for most investing strategies out here too. It also plays a major role for this strategy because you are betting on a company that has a stock price falling to rebound later on in the future. But the thing is that it can take multiple years for a company to turn back from their lower point. So if you don't have this long-term view on your investment, it's gonna be really tough for you guys. Overall, value investing is really effective, and when done correctly, can actually outperform most indexes in the market. So it might be a good strategy for you. Okay, now we just talked about something that you should do. Let's talk about something that you should not do. That is called momentum investing. And that's the nemesis of value investing. Now, I'm sure that just by listening to the name, you can guess what this strategy is all about. You buy a stock when there's a crazy hype around it. You try to get on the rocket before it takes off. Also before it crashes, probably. Momentum investing can be considered some kind of trading for the simple reason that it's really short-term based. You're gonna buy one day, maybe sell the same day or in a week, but that's really short-term. And this can actually be really hard to pull off effectively, which is why I don't recommend it for anyone that's starting out investing. There are so many factors that are not in your control. For example, the media coverage of the stock. Just think about GME, GameStop, or also how long are people willing to play with the stock before jumping onto the next one. So there are massive risks involved and a lot of potential losses too. Don't get me wrong, you can make money with this strategy, I'm not saying the opposite, but this is really risky. There is so much volatility, so much unknown, so much ways for you to lose money that I would never recommend that for someone, especially if you want to make money over the long term. That's the really important keyword here, long term. Momentum, not long term. No. And now that brings us to the next one. If you follow this channel already, you might know what I'm gonna speak about, and that's dividend investing. That's, in my opinion, a really interesting strategy, so let's speak about it right now. What's really cool about dividend is that it's a complete different world from what we already spoke about. You're not making money by selling the stock. So how does it exactly work? I'm gonna explain everything there is to know for you right now, don't worry too much. First of all, you're gonna have to invest into companies that pay what's called a dividend. A dividend is when a company has way too much money on the hand that they don't even know what to do with it. They can choose to pay shareholders for holding onto the shares by sending them cash payments that are called dividends. It means that just by holding a share of a company, you are getting paid. Even if the stock price is not moving, if it's going down or up, they don't care. They're gonna pay you this dividend. So what are the actual advantages of this strategy over the others? First, that is a really important one. If you're looking at a way of making passive income, that's an amazing strategy for you because you can start investing into companies, hold them long term, they're gonna pay you dividend every 4 months or so depending on the company. And that's actually how I made my first $300 back in 2019, which was a big deal for me. And another amazing trade of dividend companies is that you can make your cash flow increase exponentially over the long term by investing into them. Let me explain you. Let's say that you invested $100 into a company that has a dividend yield of 5%, which means that they're gonna pay you 5% of your initial investment every single year. So after 1 year, you receive $5 from your $100 investment. Now what you need to do is to reinvest this $5 back into the company. So now you have a $105 investment that is again gonna pay you 5% next year. And now it's not gonna pay you $5, but $5.25. Now that might seem like a really small increase, but over the long term, this is gonna keep increasing and increasing every year, faster and faster. That's why it's exponential. After 10 years, your investment will have grown by 62%, after 20 years by 165%, and more than 330% after 30 years. So you can see that it's growing faster and faster. But keep in mind that something really cool is that I didn't even take into consideration the fact that the stock price doesn't move. It can actually increase over time too, like every single stock market thing. So let's say now that the stock price also increased 5% while you're getting paid this dividend and reinvesting them, you will have $1,000, 867 from a $100 investment in 30 years. That's like 19 times your money back. So overall, it's an amazing strategy for the long term. The longer you hold, the better it becomes for you. So the younger you are, the more potential you have by investing into dividends. But the downside, because there are always downsides to these strategies, is that you need a really long-term view, which is really hard, especially for younger people. And there's also the fact that the company at any point in time can stop paying the dividend if they want to keep more cash for themselves, if they don't want to pay the dividend, or if they just have struggled financially, they can stop paying this dividend. So you have no guarantee over 30 years that they will keep increasing it every single year. And by the way, if you guys really love what you're seeing right here with all these investment stuff, money stuff, business stuff, go in the description of this video and join the Discord server of the community. That would be great. And that brings us to the next on the list, that is the growth investing strategy. You can see a growth investor like a value investor that drank way too much coffee. They want the good deals, but rather than having a company that is just like 10% undervalued, that is slowly growing back, they want the next big mover in the market. Think of it as the people that want to invest into a company as soon as possible so that they can experience the major growth part of the company. Growth investors are the ones looking for the next Apple, the next Tesla, the next Google, the next big thing in the market. And they're willing actually to take more risk for potential bigger rewards at the end of the line. I myself invest into growth companies quite a bit, and I believe that if it's done correctly and with a long-term view, that's actually an amazing journey to be on. But of course, since here we're speaking about beginners and new investors, I would not say that this one is the best strategy out here, since you're taking more risk and your investments will be way more risky and volatile overall. So yeah, I would still say that growth is not the best for new investors. But that brings us to the actual best option for you. There is one strategy that has proven many times to be the most passive, effective, and profitable over the long term, and you can find it right here. Now, I hope you guys enjoyed this video. Don't forget to subscribe, and also don't forget to make, invest, and enjoy. Bye-bye.